Soft Open. Cameron Peacock joins us from IG Markets in Melbourne now. Cameron, great to see you there. Yeah, what's your calls, do you think, for the ASX 200 Open in around an hour and a half?
Yeah, good morning, Bridie. Look, we're looking at a slightly softer open for our market today after gaining 0.3% yesterday to close just above 4,400. At this stage, we're calling the market down about 9 points or 0.2% around that 43.93 level. Now, overnight, we did see modest losses for the European and US markets. Some of that hype and enthusiasm, I guess, over quantitative easing starting to die down a little bit. We had the FTSE down about 0.4%. We had the CAC down 0.8%. The DAX down 0.1%. There's still a little bit of lingering disappointment that the meeting over the weekend from EU finance ministers didn't or they couldn't agree on a timetable for a unified banking sector, and there was some clashes over some of the terms and conditions of bailout requests. On the back of that last night, we did see Spanish 10-year yields rising above 6% for the first time in a week. We had the 2-year yields rising about 20 basis points, but some people are seeing this as a good thing because the rising yields might actually force Spain to accept some of the EU's conditionality. But the stalemate that we seem to be locked in at the moment did see the euro come off its highs from about 130, 130 yesterday afternoon to current levels of around 131.15. In the US, we had, again, as you said, modest losses for the US markets. The Dow, the Nasdaq, and the S&P all down between 0.2 and 0.3%. I wouldn't read too much into this. As you said, these indices are close to 5-year highs. We've had a big run up into QE, so it was just a little bit of profit taking. We did see the Empire State Manufacturing Index disappointing to the downside. It came in at a reading of negative 10.9, had been expected to be about negative 1.9, so that was a big miss. But I think the markets are looking past this data because we do have the Fed as a bit of a backstop now, but looking for a slightly softer open for our session today.
Just looking, obviously we saw that sudden drop in the oil price. I think it fell about 4% in the space of about 3 minutes there. Is that likely to mean that a lot of those energy stocks could struggle today? What are your thoughts on this, and perhaps some of those material stocks as well?
Yeah, look, I think it's fair to say probably materials and energy stocks are going to be in focus today and are going to be the key drivers of our market. First of all, we've got Fortescue coming out of a trading halt that's been well documented. Its issues over the last couple of weeks. It is in a trading halt. It is due to come out today. We are expecting to hear that they have received some covenant relief from their banking group. We're also expected to maybe get an update on some potential asset sales that they've been investigating. There's been all sorts of rumours and innuendo in the market over over the last couple of days, so some of that will get clarified today, no doubt. We did see the iron ore price actually rising 3.4% overnight to current levels of around $105, so that bodes well for the broader sector, that we do have that price back over $100 a tonne. But we did see a little bit of profit taking across the materials sector last night in the US, and we've got BHP's ADR suggesting the local stock will open down about 0.4% today, or just above $34. You touched upon energy prices a moment ago. They were down sharply overnight. I think they dropped about 3 or 4% in the space of a couple of minutes. There was a lot of rumour and speculation as to what caused that. Some people were suggesting it was a fat finger error. Some people were suggesting that there was rumours going around that the US government was getting ready to release some inventory from its strategic petroleum reserve. No one really knows, and it hasn't really been clarified, but the weaker price, down 3% to around $96, could put some pressure on energy prices and energy stocks today, that's for sure.
Cameron, as always, thanks so much for that.
Thanks, Bridie.
Let's